Ladies and gentlemen, welcome to Only Trade to Win. Today is Tuesday, December the 19th, 2023, 4:30 a.m. New York time. Right now we're looking at the daily picture of the Dow Jones Industrial Average Index, which keeps making its all-time highs in the past week, and I'm sure you've heard about that. But I just want to go back to when we started following and talking about the Dow Jones Industrial Average, eyeballing this all-time high. If you look in the middle of the chart where you see the number 1 in blue, this is the last day of trading of October. The significance of this area is because if you look at the blue line, this is where the price started at the beginning of the year 2023. So after trading for 10 months, we went negative just 2 months before the end of the year. We also made a third consecutive lower low. There were a lot of stops that were sitting below this level, and there were some people who were shorting it, the aggressive technical traders. So right here we hit some stops, some people got short, and we basically reversed in one day. In one day, the Dow Jones Industrial Average recovered all its small temporary losses. The red line down below, it's the 52-week low, and here it did not even challenge, it did not even come close to this area. So the Dow Jones Industrial Average went negative for the year 2 months before the end of the year. It rejected the negative territory. It went back positive almost immediately, 1, 2, 3 days. Now, once we went positive, we were just gapping up. Where you see the number 2 and the red dotted line is our first resistance area. In this area, on November 11th, I made a video. I said that the Dow is so strong that it cannot even pull back at all. We had this one little candle. It's 2,600 points up and maybe 100 down. Right here in this area, I said it's super strong. And then we gap up into our second resistance area, and that number 3 is actually where we put the Dow on the watch list. Here's our first watch list, where on November 11th, right here, we noticed that the Dow is positive on the year and it's only 4% away from its all-time high, and we made it green to make sure that we remember. And when we went to the picture and we placed this green line, we saw that it's not really that far, and the only resistance area will be right here around 35,600. That's the previous 52-week high. So from number 3, without any pullbacks, we go pretty much straight up to our 52-week high. We gap up, and again, we spend about 1 week under the 52-week high, and our assumption was that once we break through it, the market will run away until it finds liquidity, but we never know where it will find the liquidity, because this is the all-time high in the territory in which it never traded, and the only ones who will start selling are the ones who will start taking profits, and then later people will start shorting it. But again, people who are long, for 2 years they've been waiting for the Dow to make its all-time high, and now they're not selling. They have about a week of trading before Christmas and a few more trading days before the end of the year, and they're gonna get paid, and their bonuses are dependent on how well this particular index performs. So they have no incentive on selling right now, plus we're having a huge short squeeze. So let me show you who got fucked in this thing for real. Here on your screen is the report that shows the total amount of futures positions held by different parties that are under requirement because of their size to report this information to the US regulators. And then the US regulators publish this report every Tuesday. Here we're looking at December 5, 2023. Right here, this line with the parentheses $5 times Dow Jones Industrial Average Index means that 1 point move in the Dow Jones Industrial Average equals to $5 profit or loss in the future contracts that trade on the Chicago Board of Trade. And in our case, if you look here on the left side, it says dealer intermediary. It's the brokers who buy for individual traders who are watching shows on YouTube and are trading from home their own funds. Now right here, it says long and short position. We're looking under short position because we know those who got short are really hurting right now. And we see that the total amount of contracts is 26,420. And this number right here, it shows, in this case, it's positive. It shows the increase in the number of short positions that were established by the date the report was published, which in our case is December 5th. Now, again, in the week preceding to December 5th, 2023, 11,000 short contracts were added by individual traders that trade through broker-dealer, which is actually an increase of 75%. If we go back to the top where it says dealer intermediary and move to the right, you can see asset asset manager institutional. This column here shows what professional money managers and institutions that trade in the Dow Jones Industrial Average futures contracts, what they did in the same week, going up to December 5, 2023. They had 10,000 contracts on December 5th, 2023, and it represented the reduction of 8,000. In other words, they closed almost 50% of their short positions and almost the equivalent amount to what the private traders did. In simple words, while the asset managers and institutional traders were closing their short positions in the Dow Jones Industrial Average that was sitting near its all-time high, the retail traders, so the traders who trade from home, people who trade their own money, they were shorting the Dow Jones Industrial Average. Here is December 5th, 2023, the date of the report that we just looked at, and here we are today. Let's say up 1,150 points. I know that nobody likes math, so let me do it for you. 1,146 points multiplied by $5 per point. One contract lost $5,730 from the level where retail traders shorted the Dow Jones Industrial, and it's exactly how much money the institutional and money managers made, $5,730 per contract. Or you can say they did not lose because they covered their short. So we can also take this a little bit further and say we know that there were 11,000 contracts. Let's say if we multiplied this sum by 11,000, this is how much money went from individual traders, their own personal funds, people who use brokers, to asset managers, and it went to the institutional traders. That's $63 million, and we're just talking about few days. And the point that I'm trying to make is that you need to learn how to think for yourself, that this is not the business where you can rely on broker tips or subscription services or some kind of magic indicators, all that shit. It doesn't work, because if it did, nobody would tell you about it. But this is actually the way to learn, and this is the way to go, because each of these red and green bars that represent somebody's opinion that was backed by hard cash, that people actually went and they made the trade on the exchange and they paid money. Once said, I am going to sell it at 35,000 because I think it's going down, and then somebody else said, no, I'm going to buy it because I think it's going up from 35,000. If you really think about it, it's two people looking at the same thing at the same moment in time, and they have completely opposite opinions. But our opinions don't really matter until we start putting on trades. And these little green and red bars, they are footprints that were left behind by men and women who had enough conviction to actually go in and put the real money at risk. And all this is a picture of human nature repeating over and over and over and over. However, what happened here is exceptional, because if you saw that the Dow Jones Industrial Average rejected the negative territory here in number 1, and it ran up in number 2, its first resistance area, and it didn't even pull back and took off from there, gapping up to number 3, which was exactly the resistance area number 2, but it didn't even pause, and it kept running. It just kept running, and you couldn't really help but say, look, we have 4% left until all-time high. We rejected this bottom so strongly, we just gapping up, we're not pulling back, we have only 4%. They have to try it. Let's see if they try it, and if they try it and they succeeded, there will be no resistance on the way up. This was a beautiful trade. It was so awesome to explain this thing and share with you, and I think that, we're gonna get this 100 more times. All I'm saying is that you need to have a way to look at this stuff, and you look at this stuff all the time, because if you don't look at this stuff all the time, what you see at number 4 will happen. And number 4 is when I got the quote from Reuters. That's December 16th. That's when the Dow Jones Industrial Average trades above 37,000. And they say, after this week's dovish pivot by the Federal Reserve, what, the market ran up? Because let me interpret what the Fed said. The next year is the election year, and how would a Democrat be re-elected when we have interest rates that are sitting at a 15-year high? And if you really look at it, it was a really brief period of time. We can go back and say we actually have not been this high on the interest rates in 20 years. So it's time to bring them down, and it's time to run this market all the way up. And I'm not saying that anybody's doing anything, but we know that if the interest rates are going down, it's inflationary for stocks. They're gonna go up. The money will be more and freely available. It will be cheaper. Therefore, US companies will earn more profits. Therefore, the Dow Jones Industrial Average will go up. But I don't think we solved the issue of inflation. This is just a really populist political move. They're saying they're not gonna lower interest rates, so the market makes all-time highs, and everybody's happy. But somebody will have to pay for this inflation later on, and it will be us. And the only way you can keep up with this inflation, if you look at this whole game historically, is the market, is the Dow Jones Industrial Average. Here's the picture of the Dow Jones Industrial Average Index's performance for the past 20 years, or going back to 2002. It's up almost 350%. And again, I am not saying buy, sell anything. This is not the purpose of my show. The purpose of my show is to share with you how you can think like a professional trader and how you can approach this complicated and always changing subject with some kind of methodology and a way to do things that it will not use all your CPI for just finding where all-time high is, or where 52-week high is, or where the first or second or third area of resistance is. That's a system that you need to have. You need to color code everything. You need to look at one picture and in 5 seconds be able to say all the important levels. And if it's taking you more than that, then you need to look at the video that I put together on how to look at any chart like a pro in less than 3 minutes. I highly recommend you watch that video because it may free up like 90% of your CPU. And I'm talking about your brain power. By the way, when you are doing this work, you will not be bored. You will be like a detective looking for clues all the time. And this is actually becomes a lot of fun. So congratulations on following through with the first successful work in progress. It's been just straightforward in all the videos for a month and a half. You can go back and look at the videos for a month and decide for yourself if it makes any sense for you or not. But when we saw this and said that it will run up to its all-time high and then it will just take off and look for liquidity, which nobody knows where it will be, that's 2,400 points on one contract. If somebody covered one contract on the retail side, people who are just sitting at home trading their own money, that would be $12,000. I think it's definitely worth sitting here and talking about this stuff and saying, hey, look, we are not pausing at number 3. We're looking at the purple line, and we're going to blow through the purple line. It's going to be bye-bye. So if you don't want to get long, just don't lose your ass shorting this thing, because it's going to take off like a midnight express and you better be on board. So ladies and gentlemen, thank you very much for your attention. I hope this helps. This is super exciting. You know, trading is one of the most difficult things that you can do, but if you can make it into something that is systematized and organized, and all you do is follow the process, then you get to do the fun part, you know, and the fun part is actually trying to get a clue and find good entry point. And if you don't, you just wait for the next one. And until the next time, I wish you happy trading, navigate with care, and we'll see you soon. Have a great day, everybody.